Good morning, James. Thanks you for joining us today. You had a stronger close to 2020 than had initially been expected. Were there any particular drivers behind that?
Yeah, well, hello, Fiona, and yeah, lovely to talk to you. I suppose just what a year in total, really. I mean, we did come into 2019 with our ninth consecutive year of growth, so actually we were in good stead. It wasn't the year that we hoped for or planned for, certainly, and actually at its worst was in Q2, as you can imagine. That was the most profound effect, where we were 39% down year on year with regards to sort of profits generated from the group. However, we did see a sequential recovery through the remaining quarters of the year. So as you sort of mentioned, the second half of the year, margins bounced back to a creditable 11.5%. We finished the year profitably, and actually in the process, we managed to reduce our net debt to an all-time low. The reason for that strong second half performance, I think, was just down to that really swift decision making at the onset of the pandemic. We did restructure both people and our property portfolio. So we had time, because we did it so early, for those decisions to really take effect. So we lowered our cost base, revenues improved in the second half of the year, simple model, obviously profitability is enhanced. And that's really what happened. A couple of other things I think of note, though, is that we have really fostered over the last sort of 12, 18 months a real collaborative approach. We're trying to keep as much of a client spend within the group using multiple agencies. And that took hold in 2020. So 3.6 million of revenue was referred by a lead agency into another agency in the group. So that's a phenomenal contribution, something we've not had before, or certainly been able to measure to that quantum. So that, I think, has really helped us. And it also has meant that the group is operating as one. I think the final point, though, is just really the most important one for that second half year performance is the people. You know, we've got a very talented group of people. We are a service-based business, so we could move into a remote working model without missing a beat. We've got a long, loyal client base. You know that we often talk about our client retention figures, and they're still best in class. 50% of our revenues from clients we've had 5 years or more. 20% of our revenues from clients we've had over 20 years. So that loyal client base, we were client partners with them, and indeed, as I say, our talent and our employees were working very closely with them to get them through those troubling times. So really, I think it's down to the hard work and the commitment of everybody in the group, for which I'm immensely grateful.
You have an initiative called Mission Made. How is that contributing to the efforts, and are you extending it now to more of the group agencies?
Yeah, great question. I mean, Mission Made is part of what we call the Mission Advantage, which is a collection of more specialist agencies that we have within the group that can provide non-core services for some of our generalist or industry specialist agencies. So if you like, that again gives a multi-disciplined full service offering to all of our clients, whichever way they come in and work through whichever agency. We actually added to Mission Advantage in 3 ways. I'll come on to Mission Made in a second, but you know, despite some of the challenges that were known within our industry in 2020, we acquired an agency called Innovation Bubble. We did that in the summer of 2020, and they sit within that Mission Advantage. And they're very interesting because they're a behavioural science consultancy. So team of psychologists, they really get under the skin of consumer decision making, but before those decisions have happened. So getting into that subconscious and understanding the reasons why consumers make the decisions that they do. We also, in December, so very new to the group, acquired an agency called Alive, which is a Singaporean-based brand activation and experiential marketing agency, which as we grow this year will be very strong in that region because they've got really good clients like Western Union, Nando's, but they're also going to work with a lot of our other agencies to, as I say, grow that reach and that remit in the area. And the third one, as you mentioned, is Mission Made. Mission Made was something that we created. We launched it in October, and it is a 24/7 digital innovation, production and product studio. 2 hubs, one in the UK, one in Asia, so that we can deliver that time difference. So people are working when others are hopefully sleeping. And it was a really successful launch. It's worked already with 9 of our agencies. And it provides those services that, again, those agencies might not have in the depth or breadth that they need to deliver against client briefs, or if they do have it, or if they don't have it, then obviously we can provide that service. But if they do have it, we could augment it and actually bring some of that best-in-class capability. So really good initiative. It's worked really well. Everybody in the group has really got behind it. So yes, there will be a continued rollout, working with all of our CEOs throughout the course of the next 12 to 18 months. But a really good initiative that enhances that mission advantage that we have at the core of our group.
What pandemic prompted changes to working practices do you think you're likely to keep on with when things revert to some sort of normality?
Yeah. In truth, it's a little bit early to say, because obviously only this week we can go back to the pub, albeit in a freezing beer garden. But as we sort of see the mass vaccination programme really sort of take hold and hopefully life return back to normal, we will really work with, as I say, all of our agency leaders and indeed our employees to get the right model. As you know, we have an agency first culture, so the nuances by agency are really, really important. But I think if we took a step back, it will be a hybrid model. So for those that want to connect, for indeed, enhanced creativity, we want to get people back into the offices, back into the workplace very safely, I stress, but also at the pace that they're, comfortable with and used to. But that won't be in its entirety. As you know, we actually restructured our property portfolio last year, so we have a smaller footprint with regards to offices, and so we'll be looking at smarter ways of really leveraging that real estate. The other thing I think it's probably worthwhile pointing out at this juncture is that in 2020 we launched our ESG manifesto. So in 2019, we, as I think I mentioned before, were really sort of driving diversity and inclusion within the group. But we broadened that out to that broader ESG manifesto. So we've got some challenging science-based targets that we've set ourselves around the number of apprentices that we're going to have within the group. So again, in terms of working practices, we want to give opportunity to underrepresented groups, but also provide that opportunity for youth. So we're bringing that young talent in. And the ESG agenda obviously also tackles the gender splits across all of the agencies, pay inequality or pay equality that we're trying to get to across the group. So we've got some very strict, stringent targets there. But we know we're not experts in this field. So we are working with two partners, Green Element on some of those more environmental factors, and then Creative Access, again, with providing opportunity to some of those more underrepresented groups.
So how has 2021 started, and what do you feel, how is the outlook for the group now?
Yeah, I'm sure you would know that I would say this, but generally really positive about the future of the group and indeed how the year has started. Obviously, we have been in full lockdown for the first quarter of this year, but despite that, we have seen that sequential recovery continue. So Q1 has been better than Q4 2020, and we will hopefully see that continuation throughout the rest of the year so that in Q3 and Q4, we can get to pre-pandemic run rates. That's really what we're seeing, and that's our assessment of our outlook. Now, that will be with some of the more challenging businesses returning in 2021, most notably property. When the pandemic started in earnest in April and May of last year, the property sector sort of shut down. It was closed. You couldn't go on to a new homes development. So therefore, they weren't building any new homes because you had the lack of supply and the supply chain broke down. So you had a perfect storm, which obviously affected our property business. Now, they didn't take that line down. They actually pivoted more into a digital operation and indeed took on some more commercial contracts. So they've started the year well. And as that industry picks back up again, they're looking set fair for the second half of the year. One of our star performers last year was our technology agency. That grew year on year by around about 10-12% last year. And again, they've started the year really strongly. So we'll hopefully see our strong performers from 2020 continue to perform in 2021. And then some of those agencies, because of the industries in which they operate, who had a more challenging 2020, get back to the levels that we know that they can get back to in the second half of this year. But they will do it from a lower cost base. So again, we're really focusing on improving the profitability of the group. The other thing just to sort of say in terms of outlook is that there will be a lot of opportunities. As you know, we are an acquisitive group. We have grown through acquisitions over the last 10 years, and we see a real opportunity to continue to do that, as well as driving some of our own strategic initiatives. Mission Made is one case in point, but there are others on the slate that we'll look to get to. So all of that, and indeed, I think just going back to that point that I made at the start, with the talent that I know that I've got within the group, the talent that I've seen operate in some really challenging conditions over the last 12 months, that's really why I'm so positive about the future of the group.
Thank you very much, James.
No, thank you.